Welcome to Happy Hour Holidaze with your host, Manny Febre. And we got our co-host, Manny Febre, and we got a special guest in the house, the man that flips more homes in Tampa Bay, Brian Aponte. Brian, how we doing today, brother?
100% is every day. How you doing today?
Pretty good, man.
Doing okay?
Yeah, man, we're doing great, man. Honestly, when we first started this podcast, we're like, man, the one person we want to get on this bitch is fucking Brian, because not only is your character unbelievable, you're an unbelievable person to know, man. So
I appreciate that. Let's just kick it.
So as far as the temperature in the real estate market right now, Brian, what are you feeling? Because I know the interest rates kind of went up. I mean, I don't know how much it affects wholesaling and flipping and stuff like that.
Yeah, definitely. So let me just lead into that. So basically, when the Fed started raising the rates, 75 basis points, 2-3 months in a row and bringing it up, and the prime rate's at about 8.25 right now. A lot of people would look at that and be like, well, you know what? The people's debt to income ratios, it's not there. The house has got to collapse, right? But the problem is the cost of construction and the cost of dirt, because we have 11 houses going up right now and about 20 in the back ready to roll. So actually, more and more people are moving to Florida, and especially Hillsborough County, because it's a red state. We don't have any state income tax, so you have a lot of new money combined with old money moving here, right? So the assets are just moving and flying. But I like to look at it like this. People talk about inflation. So let's say 10 years ago, right? When you go to the gas station, you buy a 1 liter Coca-Cola. What's that, about 99 cents?
Yeah.
What's it now, $4, $3? So when you look at the cost of items, if those items are moving, everything's got to move. Cadillac Escalade cost, what, $120? They were 50. So the whole point, what I'm getting at is that the money is worth less. And as the money's worth less, the assets are going up. And then when you look at just basic general knowledge, they're cloning meat. They're cloning people. You got AI taking over. What's the only thing they can't fake is dirt, right?
Yeah.
Land. Yeah. And then, house, everybody needs to be somewhere. There's an affordable housing problem. Look, I just bought a triplex in 33602 for a 4-bedroom. They're paying $4,300 a month.
Well, that's Section 8?
Section 8.
Hey,
so imagine, the point of the matter is that real estate's going to keep climbing because people look at houses as a form of wealth. Yeah. Because let's think about it. If you make $200,000 a year, the IRS is going to probably rob you for about $70. You're going to get a car payment, mortgage, and boom. By the end of the day, you're still broke. Yeah. So at least if you own real estate, it's a way to park some money.
Yeah, no, and I agree. I mean, besides real estate, what else are you seeing? Like, I know you got into the sports cars too. Like,
yeah, I've been doing sports cars for 40 years. That stuff's gone up 500%.
But what kind of assets besides sports cars? Do you think any metals, or do you fuck with the stock market?
Yeah, of course, all day.
All day.
Tesla's up about 130% this year.
Oh yeah, I saw that, man. That's a good one.
You got Disney collapsing because the beef they got. With DeSantis, I think it's at $90 or less a share.
Yeah.
But I don't really try to deal too much with stocks and stuff like that. Because I can't control that asset.
Yeah.
I like to purchase liquid assets without many paper trails, diamonds, gold, silver. I like silver because they're moving towards electric vehicles, and the batteries, they take silver to make them.
Yeah.
And silver's maybe $26 an ounce. Man, that's way too low because gold's at about $1,900.
Yeah.
And then you got Bitcoins about 32,000 and, just different cryptocurrencies and whatnot. Yeah. But I foresee the real estate, like I've been seeing it since I was 5 years old. I'm 53 years old, as where to go to buy.
Yeah, no, I mean, how did you get into real estate? I know you started off with the sports cards and then you went towards real estate. What was that moment that got you into the real estate?
Well, my family was into real estate for a long period of time. When I lived in New Jersey, I moved here in the 80s.
Gotcha.
My first job here was a janitor at Brandon High School.
Yeah.
I was making $200 a week.
Jesus.
And I used to walk to work 3 hours back and forth a day.
Fuck.
And then I got a little flea market booth, and then I started with the baseball cards because this is something I've been doing since I was about 8-9 years old. But the real estate is just a common sense play.
Yeah.
And then I read the book Rich Dad Poor Dad. It's like this. Look, if you're buying a house back in 1990 in Tampa, Florida, in Ybor City, or Brandon, Florida, or you're paying $50,000 and the rent's $800 a month, that brings in gross revenue $9,600 a month, which is about 24% of the cost of the house, right?
Yeah.
So you have to look at, how can I purchase this where I could leverage it, and then I could use my money to purchase more assets.
Yeah. And that's the first book I read too, honestly, Brian, that got me into the spirit of being like an entrepreneur. You know, it was like that book right there changed it. The only thing I disagree with him was when he was saying it's not good to own a primary residence. He's like, it's better to rent for you. And I'm like, well, I mean, bro, you know, if you find a primary residence that has some work to do, you get it, you gut it, you fix it. You already increased your value. You got equity in that bitch.
Yeah. But basically what he's probably trying to say in that thing, because basically what you're explaining is a renovation.
Yeah.
So you're going to make money on the fact that you bought it cheap and you renovated it. But when you live in your primary asset, it's basically here's how I look at primary assets. I honestly think it's like it's a liability. Because here, if you buy a house for $1 million and you pay cash for it, and even if you take a loan against it to make money, that's probably the only way to do it. But if you live there and you have no debt, that money's collecting no money. You're basically living in a property that's depreciating according to the work that you have to do with it, right? So it's money on the sidelines that's not making you any money.
Yeah.
But me, I always own the asset that I live in because I want to own it.
Yeah.
But if you think about it logically, with the money that's parked, you could take that money and make new money with it.
You're right. I mean, that's one thing that Robert Kiyosaki always says too. He's like, bro, it's always good to have a shit ton of debt because that's not my money. You know, that's somebody else's money.
It's good to have the right debt.
Yeah, the right debt.
So, like, let me give you an example. Let's say you have a line of credit for $250,000, right? Yeah. So you could go and let's say your interest rate's 10% because the prime rate's at 8.25 plus a couple points over prime. So if you have $200,000 and you're borrowing the whole 200, that's costing you $20,000 a year, right? Yeah. But if you buy a house for 200 and flip it in a week for 220, you just paid the whole year's worth of interest on that one deal. You know what I mean?
Yeah, it makes sense, man.
So, you know, there's many ways to skin a cat.
Yeah.
When I buy real estate, I look at, here's how I buy. If I buy this asset, how much can I flip it for in one day?
Yeah.
So meaning like, look, if I buy it and I get a contract, I already know what it's worth before I go there. That's because I know the area, I know the zip codes. Yeah. I'm basically like a cab driver who buys and sells real estate because I'm in the streets all day and I know what it's worth, right? Yeah. And I have a large volume of people I sell to. So my job is to buy it for way less than what I'm paying, or not way less. So if I buy a property for $500,000 and I sell it for $530,000, I just made 6% a month. That's basically equivalent to 72% a year.
It's basically like the fucking stock market.
You go way better. But the problem with the stock market, like I told you in the beginning,
you can't control it.
I don't know what's going up or down. It's like a seesaw.
Yeah, no,
and I'm not really into playing games.
No, I mean, that's the best way. I mean, you can control it. When it comes to like building, like, you know, a lot of people you've seen, they tear down the old house, they build a spec home. What do you think about that?
Yeah, we're building 11 at this current time.
Oh, 11? So did you just clear one out? Like just like clear a whole like section of them or just buy land?
No, so we buy individual vacant lots and then we build them, and then we purchase land, and then we get it entitled to the maximum capabilities.
Gotcha.
So let me give you an example. Like I got a property on McDill, Columbus that I've owned for several years. I bought it for $700,000 in February of 2018. Wow. I could sell it now for $3 million.
Oh, wow.
You know, that's about a 425% profit, Jesus. Right? Plus I didn't rent it. It had a 30,000 square foot warehouse. I could have leased it for $30,000 a month minimum. I just don't like dealing with tenants.
No, man. And honestly,
you know, I personally, let me just get back to this though. What you want to do is you want to look at the future land use and understand what you can build in the future. Then you get yourself a good GC, you get yourself a good architect and a good engineer, and you get somebody who could communicate with the city so you can make it happen. Because all you really want to do is pay and sit in the sidelines. Yeah. You don't really want to be too famous out there because fame brings problems.
Yeah.
You know what I'm saying? So that being said, the way to make money is you have to know what the house is going to sell for. You have to know what it's going to cost to build. And that's how you determine what you pay for the land.
What do you think the average cost per square foot right now for construction, new construction is?
Yeah, it depends on where you're building, how many floors, what type of fixtures that you're going to put in there. But just an average $500,000, 2,000 square foot house is probably going to cost about $140 to $150 a foot.
That's still solid compared to what these buildings are fucking smoking people out.
Yeah, but you want to know, there's a large demand for this.
Yeah, because everybody needs
everybody needs a house, and all the old houses need a lot of work.
Yeah.
And then, but just to make money in the real estate business, you have to be a man with many hats.
Yeah.
So you have to know about basic knowledge of the asset. You got to know what the houses are bringing. You got to see more what the rents are, who's coming, who's not, what areas are being manipulated by certain people coming to buy for rentals. And you just have to have a wide range and large field glasses to understand what's happening.
What would you say is the biggest real estate deal you've ever done where you've made the most amount of money? I guess profit net.
So in 2020, I bought a trailer park for $1 million. And in 2022, I sold it for $3 million. So I tripled my money, and I didn't do anything. But I bought properties for $40,000, sold them for $100,000 in one day.
I'll take that all day.
Yeah. I've probably done, I'm going to say between 25 and 3,000 homes.
Wow, man.
That I bought and sold. In probably a 3-month span, I sold 100 houses. And there's certain... in the certain years when the market collapsed, because the market collapsed, I think it bottomed in 08. And then in 09, there was a bunch of short sales and banks trying to liquidate inventory. And then you had a lot of people who weren't paying. So you had a lot of short sales and whatnot. So I would say from 2010 to 2015, I realized a lot of percentage on my money. And I will say I've made many mistakes because I should have held a lot of those assets. But I would say in the previous years of 06 to 08, I got caught in the trap where I owned a lot of real estate that depreciated in value. So it changed my mindset.
So then you were like,
so you have to understand that when you're in the real estate business, you cannot control every single asset if all your money's in that. So what I mean by controlling is if you can buy a property for $100,000 and only put 10% out of your pocket with owner finance, you're better off than paying cash for the property. Gotcha. It's good to use your cash if you're going to flip it immediately.
Yeah. And how do you sell it in one day?
Well, how it works is you have other investors that are looking to buy to renovate, tear it down. So you already know their criteria. So when you come across an asset and you got 50 type of buyers or 50 different buyers for 7 different asset classes, you call them and say, hey, look, I got this property coming in. Drive by, tell me what you can pay for it. So you bring 4 or 5 people there and say, oh, I could pay you 110, 120, whatever. So now I already know that's my bottom price. So I have to pay less than that. And the reason that I'm capable of buying for so low is because when I go to buy, I don't need mommy or daddy. And I'm explaining to you what mommy and daddy is. I go in there and say, hey, look, I could pay you $500,000 and I can close the day your title's clear. I don't need an contingency. Mommy and daddy are the bank and the appraiser because the appraiser basically tells you what they think it's worth. So the bank is the one that's going to give you the loan. Hard money lender, bank, money market, direct, self-directed IRA, whatever, But when you come in with cold hard cash, you dictate the circumstance. Because if you're not going to sell it to me, somebody else will. Right. So you're the one in control of the game. See, my thing is I like to have control of what I'm doing. If I cannot control the situation, I let it stay dormant until they call me back. And when they call me back, that means everybody else passed, so I have to pay less.
That's that's a way to
like right now I'm in the midst of trying to buy a little motel, 50 doors for $2.8 million.
Wow.
And I think it's generating $600,000 a year. And that right there, I could make it better and reflip it to another investor.
So you're thinking about grabbing that motel, renovating it, and then
so what I'm thinking about is 2 different plays. I like to have 2 different exit strategies. It sits on a large parcel of dirt where I could get it re-entitled to build more units, and I could collect rent while I'm getting it entitled to resell to a developer.
So you're trying to turn it into an apartment building.
Yeah, they're probably going to take it for affordable housing because affordable housing is the color of the week.
And that just
basing like green, blue, black, yellow, pink, brown, whatever. So there's always different things. When in the market, when the interest rates were really low, people wanted to build on the water. They wanted to build on the lake. They wanted to leverage their 401ks. They wanted to put it in crypto. Now it's affordable housing because we have a shortage of workforce and affordable housing in this nation currently.
Yeah, and have you seen when there was when everybody was waiving the appraisal contingencies? Do you think that hurt the market a little bit? I mean, I know it was coming. I mean, it increased the pricing, but do you think it overinflated it where people were coming?
Definitely not, because the market bears what the market bears.
Yeah.
So basically, I don't really deal with that because I don't retail anything.
Yeah.
I personally don't like to sell to the end user. Gotcha. I just don't like doing that.
Just like doing the
I like to just sell to people who want to make money because I don't like to babysit people.
Yeah.
Whenever you're going to sell retail, you're just becoming a high-end babysitter.
I got you.
And it's just not me.
Yeah. And
The only thing we sell retail is the new construction, and that basically sells itself.
what kind of look do you usually go
It depends
to?
on the neighborhood. Some neighborhoods are modern, some are affordable. Some of them, like in Seminole Heights, are like bungalow style. And then when you're like in downtown or, anything east of McDill is where the real money's at. Even if you're in South Tampa, if you're west of McDill, it's worth a lot less. Everything south of Kennedy used to be worth a lot of money because of Plant High School District. But now the movement is towards the armature works. So the movement right now is north of Kennedy, south of MLK, east of North Boulevard, and as far west as Armenia. And that box is very strong right now.
What do you think about New Tampa?
33647 New Tampa. I've never purchased a house there. I just don't like the neighborhood. 4 years ago or 5 years ago, the houses were bringing 100 a foot. Now they're bringing like 200-300 a foot. And the reason they went up in value because you're getting a big box for cheap.
Yeah, that's
and
true.
you have 2 ways in and out of it. It's just not my cup of tea. I only buy mostly, I will take that. Let me retract that. Not I only. I prefer to buy in the city limits of Tampa because I will buy anything.
Yeah, no. And that whatever makes sense to really make a profit at the end of the day. When it comes to like the sports cards, is that really your passion? I know you like real estate too.
Of course. So sports cards is like the new art. Let me ask you a question.
Yeah.
You heard of Van Gogh and Picasso and stuff like that,
Yeah,
right?
hell yeah.
Okay, and you heard of, these guys, their paintings are bringing 100, 200 million, right?
Yeah.
But let me ask you a question. When you turn on the television, do you think there's more TV shows about sports or art?
No, sports all day long.
So what's happening now is the intelligent money, like the hedge fund money and whatnot, they're coming in and they're purchasing these sports cards. Like the owner of the Mets, I don't know if you know him, Steve Cohen.
Mm-hmm.
He's a $15 billion person. He just bought Collectors Universe. That is the company that grades the cards. And he took it from a publicly traded company to a private company. And then you have Fanatics. I'm pretty sure you know Fanatics.
Yeah, I know the Fanatics.
Okay, they just purchased Topps, the baseball card company.
Yeah,
I think it was like $100 million, maybe a year and a half ago. But let me just give you like an example. Like a 1952 Topps Mickey Mantle in 1998 was about a $100,000 card. Now it's about a $25 million card.
Wow.
And then, like Roberto Clemente rookie in a PSA 8 might be $250. And I used to buy them regularly in the 90s for like $1,500. So, I buy these assets because this is an asset that is gaining massive popularity. And at the same time, it's better than art because you follow the people. Like I personally don't do much with newer cards like Pat Mahomes, Tom Brady, because those cards, they're massively produced. And even if they're 1/1, 1/10, there's hundreds of 1/1, 1/10. So when you buy Mickey Mantle, Roberto Clemente, Willie Mays, Hank Aaron, Ty Cobb, Babe Ruth, Lou Gehrig, Cy Young, Walter Johnson, you're getting a piece of history.
I gotcha. When we get back, we're going to ask Brian, do you think that these football cards or baseball cards are going to go digital because of the NFTs and all that shit, or are they going to stay paper in the future? We'll be right back.
Okay, awesome.
All right, Brian. So when it comes to the football and baseball cards and all that stuff, I was really thinking, do you ever think, you remember when there was those stupid NFTs and all those stupid like pictures?
Yeah,
do you think that shit is ever going to be like that?
No. Well, there's people.
They'll stay paper?
Well, the paper stuff has the value because that's the actual physical commodity.
Okay.
So, how do you grade an NFT? Like, I was into the Bored Apes and, the Party Bears and all that, like everybody else. I made a couple bucks, but that's irrelevant. I don't even like mentioning, like I own crypto and stuff like that. But to me, that's like an embarrassment because it's like, I didn't really earn this money. I just got lucky.
Yeah.
So me personally, with the sports cards, you want to stick to the vintage and you want to stick to key Hall of Fame players. Whenever we have more time, I'll bring some cards here so we could see, I buy every single day.
Where do you buy them, and what's the largest bulk you've bought?
So I bought collections for $500,000-$600,000. I spend money on eBay daily. I just spent $34,000 yesterday. But I buy certain things, and there's certain cards that are undervalued that I try to buy a lot of. Like, let me give you an example. Like 1986 Topps Jerry Rice. Okay. A PSA 10 is probably $50,000 to $70,000. A PSA 9 is $2,500, and a PSA 8 is $250, right? So basically, what that grade is, it's a condition scale on 1 to 10. The difference between an 8 and 9 is very minimal. So, we could crack it out of the holder and resubmit it, right? So there's certain cards like Ricky Henderson, rookie, 1980 tops, Cal Ripken, 1982 tops traded. Like these are mega stars. Their cards are very low and they will go up. They will go up. So that's how I make money. I look at the population report. What that means is how many cards they graded and what grade they're in. And let's just say like there's 5,000 Scottie Pippen rookies in a 9. I own like 700 of those. Okay. So because Michael Jordan won 6 rings, but he won 0 without Scottie Pippen. And, like Foxy Brown once said, I'm nice around Mikes like Pippen. So basically they played off each other, right? So I think that's an extremely undervalued asset.
Do you think, so obviously you don't only do baseball. I mean, you do football, basketball, hockey, all of them,
I look
right?
at the sports and I say, okay, how can you write a story of this sport and who could you cannot exclude? So let me give you an example. Can you talk about football without Tom Brady?
No. No, you can't. No.
Right. He's got more rings than any franchise. So I got Tom Brady cards that are worth $30,000, $50,000, right? So when you talk about hockey, you talk about Wayne Gretzky.
Yeah.
He won 9 MVPs, right? So basically, you cannot talk about basketball without Michael Jordan. Like there's no way ever. So I own thousands of Michael Jordan cards, rookies, first year, second years, the wax boxes. So, and then we are in the beginning stage of sports collecting because you have the smart money, hedge funds. It's just like with the real estate. When in 2009, 2007, the smart money came in because the Oracle of Omaha, right? He came in and said, if I was young, I'd buy every single family house in the world, in the United States. So the hedge fund started collaborating and say, well, if we can buy a 3-2 block built in 2005 for $150,000 that cost $400 to build, why wouldn't we buy every single one? That's why the rent started escalating in price. Then when you look at the sports, when you go to the mall, right, what do you see? Sneaker stores, sports. I own about 500 hats, minimum, probably more. So all these companies are benefiting off this, right? And sports is like a way of life. I'm a big baseball fan. I watch 162 games a year, right? Playoffs, whatever. And you could ask me anything about any sport and I'll tell you an answer. So this is something that's blowing up at astronomical proportions.
So what are you doing? Are you purchasing the card, sitting on the card till it goes up in value and then
so
reselling?
Basically we have an eBay site where we probably have couple thousand items on there and we put them at what we want to sell them at and we take offers. So if I buy a card for $5,000, let's say, I'll put it out there for $7,500 and I'll just wait for the offers to come. Meanwhile, I'm constantly buying.
So how long does it take you to actually get those offers? Because
I probably sell 10 to 15 items per day, which is not a lot, but the average sale is about $1,000.
So you got,
but I'm buying and building, buying and building. It's just like any asset class. If you own, Apple's probably a $3 trillion company, right? So if you would have purchased it before the multiple splits, same thing with Tesla. Tesla went from 1 to 3, 3 to 5, 5 to 2. You know what I mean? So you want to be able to sit on the prime assets. So as they escalate in value, you could sell some, realize it. But the thing is, you don't really want to sell. You want to continue to buy because there's only a certain amount. And the more collectors that come, they all want to get a piece of that action. So the price goes up because of the supply and demand theory.
Would you say you're one of the biggest trading card sellers and buyers in the nation?
Well, I don't really know because it's hard for me to compete with hedge funds that'll put up $1 billion.
Hedge funds are buying cards?
Oh, billions of dollars, of course. But I probably am one of the, of the regular people that doesn't have borrowed money. I would say I'm pretty high up there.
So then could you kind of shape the market in the way you want to shape it?
Some of the assets, that's why I try to buy. Like here, let me give you an example. Like Derek Jeter, rookie, has multiple rookies. Everybody buys his SP card because it's the prime one. But there's a 1993 Pinnacle where the border is black. And I think there's like 3,000 nines. I probably have like 800 or 700. I don't remember. And then there's the 10s. I think there's like, I don't know the population report because I buy multiple things, but I try to buy as many as I can. Like a hot card right now is 1989 score Deion Sanders because he's very big in the spotlight right now. Colorado football was 1-11, and he's going to take that, and he's going to be a 500 team, and then he's going to get hired by a big boy. When I say big boy, Florida State, Alabama, Nick Saban's not going to be there forever. So the point is, you want to buy popularity and you want to buy people like Bo Jackson. He's like an icon, even though he's not a Hall of Famer because his careers were short, but his cards are worth a lot of money. But at the same time, I try to buy the blue bloods, Hank Aaron, Roberto Clemente, Mickey Mantle, Babe Ruth, Lou Gehrig. This could be a topic for 30 hours, multiple discussions. But to answer your question, I do buy a lot. I try to move the markets by purchasing as many as I can and moving the market forward.
So then basically buying a lot of just one card, keeping them, and basically setting the price for
setting
that
a
card.
standard by paying. So when people put them on eBay, I'll buy every single one and I'll keep buying more and more and more because I'm moving the asset up the needle. The needle's moving forward.
So essentially, you're just going to own the entire card.
Right. But at the same time, I could collapse the market by liquidating every single one at one shot.
Why don't you?
No, I wouldn't do that. I wouldn't do that. But I'm just saying, it's a non-regulated asset. But I do it more as a hobby because in about 5 years, when I'm done with this business, I'm just going to buy houses in multiple cities and buy myself a little Mercedes Sprinter and just travel the nation at the shows.
I like that.
And go to the college football games and stuff like that.
So, Brian, Rolexes were jumping up big time on the assets. Do you collect those too?
Well, I have a bunch of Rollies too. Yeah, of course. But at the same time, like the Hulk is probably about 18,000. It came out at 8. Yeah. The green stainless the Submariner. Yes, and then you also have the Rolex Presidents, the Platinums. But the thing about the Rolexes, though, they do go up in value and they were very high because the government gave away trillions of dollars. So, people were bored in their house doing nothing and they were just manipulating, buying and selling. But, I just look at that. I don't really look at that as an asset class that I would jump in because it's really not that fun for me.
Yeah. So how many different asset classes are you in? It sounds like trading cards, minerals, watches, houses.
To be honest with you, if somebody gives me something to buy and I look at it, within minutes I'll make a decision. Like, you give me a piece of real estate. I like real estate a lot because real estate opens doors to numerous fields. Like I deal with celebrities, athletes, just different people because everybody's looking to be in the real estate game, right? So the real estate is a jump off to different things. And when I talk to guys like yourself, I learn things as well. So I talk to different people and see what they're involved in. And then once I see what they're involved in, I study it. And if I like it, I'll figure out a way to try to push myself inside there.
Do you think a hotel, like building like something like a Trump Tower, could be in your future? Like possibly like getting a piece of land?
No, not really, because I don't really like problems.
No, that's a lot of problems.
And whenever you deal with stuff like that, it costs so much money and time. And I just, the only asset that you can't purchase is time. Yeah, so I'm not really looking to waste it like that because I'm not looking to be on that level. I just like to live comfortably and happy and do whatever I want.
Gotcha.
So, I educate a lot of people. I've had people call me, I've done podcasts. I have 100,000 people see me, call me. I'll throw my number out there. I'll guide them in the direction that I would go. I would tell them, hey, look, you call me, hey, I got $100,000. I'm a truck driver. I never bought a property. What do you think I should do? First thing I'm gonna tell the guys, buy a duplex, a triplex. So then, if you got to take a mortgage, the rents exceed the payments. So you're generating a positive cash flow. Then I speak a lot of owner finance. Owner finance is the best finance because you can't deal with banks. Yeah. So, we could touch on that subject at a later date. But the point what I'm getting at is there's so many ways to skin a cat in the real estate, so many different opportunities. That's why I try to, follow that direction.
Do you feel like the wholesaling was the best way to get into real estate and get in and get out and get your money and be out?
Well, it's a catapult trampoline to make some money without investing.
Yeah.
Because, I buy properties from a guy. I'm buying a property from a friend of mine. He's going to make $50,000 and he's just assigning me the asset, right? Wow. But, I do that all the time, 10,000, 20,000, 50,000, 100,000. Because I don't care what anybody pays. I only care what I want to pay.
Yeah. Yeah.
So, that's a good jump off to make money.
And then have you seen a lot of them where you have assumed mortgages? I know back in the 80s and 90s, that was like a big
non-qualifying assumables.
Yeah, just assumables because, but I mean, they have so much value now. Are people, like still doing that where they're like, hey, I can't do it?
Well, I'm going to tell you the problem with that. Like when you assume somebody's mortgage, that's called like a wraparound.
Yeah.
Basically, those banks have a due on sale clause. Once that ownership transfers, they could call you and say, look, you got a certain amount of time to pay off this mortgage because it's against the mortgage guidelines of today. because in the savings and loan crisis in the late 80s, they took a beating on that.
Well, sure,
But that's why when I do owner finance, I put in there non-qualifying assumable. So this way, if I buy a property for, let's just say, for $1 million, and I put $100,000 down payment, I could sell it to you or him for $200,000 down, and then you could assume my mortgage. Now you're leveraging the asset with less money out of your pocket, and I don't have to go back to my lender, who's actually the previous owner, and ask them permission for you to take that loan.
I gotcha. And then when you first started out, Brian, did you use a lot of hard money to kind of get started in it, or were you?
No, I've had, I never really dealt too much with hard money.
Yeah.
I actually was a hard money lender for assets that I owned that I would sell people, because when you're dealing with hard money, it's hard to make money because they dictate the circumstances. They give you a short-term loan. They charge you a large interest rate with a massive amount of points, and they want heavy down payments. Yeah. So in reality, they're just your Shylock and you're working for them.
Brian, what's the background of Brian Aponte? Did you grow up rich?
So basically, I grew up in a small city in New Jersey, Perth Amboy, which is like 15 miles from New York City. My mother she worked in a bakery. My father worked for the city as a garbage man. He died when he was 38. I was 18. My mother, she lives with me today. She's just an average means person. But I was just always on that street trying to figure out the next hustle, how to get that new dollar. And I never really wanted to go to school because I just didn't see the money in that. And then when I look at colleges of today, you got liberal communists educating people who cannot make it in the real world. They work for a small salary. And then when the people become success stories of lawyers, doctors, they have hefty college loans that they want people like me to pay for them. So I don't look at that white collar job as money, because those are basically beggars looking for their next payday.
Yeah, no, and I agree with that. I mean, that's the same thing I thought. I mean, there's a lot of, we had our family come from Cuba, and they literally thought, hey, the only way to make it in this world is you get an education, get a 9-to-5, and basically retire after 50 years of doing the same shit.
So basically, you're just hoping to pray to God you could die. Because you're looking for that 62 to get a portion of your Social Security. Yeah. And then if you're 67, you get 100%. And then you got a pension, praying to God you get old fast.
And by the time you're 67, your fucking life's like pretty much over. I mean,
you're probably able to buy a used Escalade or something. So this is not what I look for.
So what was the first hustle that you did?
So the first hustle, when I was like 9 years old, I had a paper route. Then I started working for my uncle in the hardware store when I was 12. And then I worked in deli slicing lunch meat. And then, I used to work for a lawyer when I was like 17, bringing him cases of people I knew. And I was making money there. Then I moved to Florida and I was a janitor in Brandon High School. Then I went to a flea market booth and I started dealing with the cards. And then I bought a couple of baseball card stores. And then I hit the country on the show, to the card shows. And then, that escalated into the real estate. And after I dealt with real estate, I've probably invested in multiple things. Like, my cousin and my son are in New Jersey with the legal marijuana. They grow the marijuana and they sell it. I invested a couple bucks over there. I've had used car lots. I've dealt with jewelry stores, furniture stores, bail bonds, whatever the flavor of the day was. If I thought I could make money, I would do it.
Yeah.
And the bail bonds, did you make money in bail bonds?
Definitely made money in bail bonds, because you're selling people's freedom.
Yeah.
Anytime you're selling freedom, you're making money.
So how is it to have how is it to have so much success but also be able to balance family with success or be in the hustle? Because it's tough.
because business is a 365-day job, but you have to understand, you have to condense it in a short period of time. So I condense my business probably from 6 a.m. to like 5 p.m. because that's the average hours that people work. So I know who to call at what time, because I know the slackers from the people who want to make money. Because they always say the early bird catches the worm. I got to be up at 3 a.m. I got to be the night owl sucking them worms. You know what I mean? Because if not, I can't let the hustler get the money. Yeah. But the benefit that I have is I've been doing the same thing for so many years. I know the market extremely well. I know the streets well. I know the people who are playing the game, who are in certain different things, and I buy whatever comes my way. And I don't discriminate against any asset. It could be a junkyard or it could be a palace. I'll buy it at the right number.
So do you find most of your deals off market, or do you
99% of what I buy is off market?
So there's no Zillow.
I don't want to compete with dummies who live in different states and different countries overbidding.
But how do you find those off market?
Because I know every single person that's ever done a deal in Tampa.
Yeah.
Like, you could go anywhere with me and I'll run into at least 10 people I know.
That's true, because when we see you out, you're with at least 5, 6, 7, 8 people.
Because I'm telling, hey, this is where I'm going tonight. People are coming to show up just to see what's cooking.
But you still smoke cigars, right, Brian?
I mean, you
I
were
actually
at
never smoked
Davidoff.
cigars.
You never did?
I used to go to Davidoff every day, but I would just go to drink and I would smoke the Dunhills, the cigarettes.
Oh,
And I would just go there to wrap up my day to see what was cooking.
I'm curious, what do you think about State Road 52 and its potential to increase in value?
So everything over there in Pasco County, I think, has come sky high, and they've done a tremendous job. And the people who drew the roads and everything, they did a phenomenal job, and they seen the growth. I personally don't like it there because I like the city of Tampa, because I think if you look at reality, everything is based on the major city. When you look at New York City, everything's based on Manhattan. When you're in Chicago area, everything's based in Chicago. LA, everything. So what's happening is Tampa's the hub. So I try to buy in the hub because the liquidity's faster. Those are more like residential neighborhoods where people go because they're looking to expand their square footage, and it's a suburbia, and people who purchase there or live there are mostly like 9-to-5ers who make a pretty decent living, but the assets don't go up in value because there's not a lot of movement. And what brings the value up in real estate is the movement, the purchasing and buying and selling multiple times.
What do you think about purchasing dirt over there? Because, I mean, they're going to have to develop for the communities
the thing is,
they have planned, right?
dirt. But the thing about those, you have the major builders, the Lennars, the Mobleys, the publicly traded
I was thinking
companies.
about commercial properties is what I was thinking about.
Well, you have to be aware of commercial because what happened in the woke society and during, the Chinese virus flu, you had a lot of people who don't really want to work, so they sit at home. So they're not going to go to work. They're going to do whatever it takes not to work. And then when you look at restaurants, there's really no much mom and pops. They're all like chain restaurants and so forth. So they already have such a large in that they're going to buy the whole parcel, and then they're going to develop what they want. They're going to sell the out parcels, right? But when you deal in major cities, you have different genres of people, different genres of work, and you have like a big conglomeration of different money. So this is why I like to stick in the major city, because it's faster to make money. And I understand your speculative nature to want to go out there and you think it's going to be the next thing, but why go for the next thing if you can buy the real thing?
Because the real thing costs more money than the fake thing.
Yeah, but it's not really. It's if you know how to leverage your capital. It costs this. Like I'm buying a property right now in Waimama, 19.76 acres for $500,000. I'm putting $250,000 down. I'm giving the guy a mortgage. He's giving me a mortgage for 10 years at 3%. People are going to be like, how the hell did he do that? Because this is what I dictate. It's like either you take my offer or I just got to go.
So you're owner financing.
No, he's going to owner finance me, and it's 20 acres. My payment's $2,400 a month. $1,800 a month comes off the principal, and as the more payments come, more comes off the principal. I lease the trailer that's on there for $2,500 a month. So basically, that pays the debt, and then I'll throw more trailers and collect more money, and then once it generates a large amount of revenue, then I sell it on cap rate.
So, I mean, final words to the audience, man. We really appreciate having you in studio and everything. What would you tell the younger generation, somebody who's trying to go out there, maybe go to college or still deciding? I mean, how do you find that hustle, that drive to keep going and make money?
So my word for advice for anybody who's willing to listen to me is just do whatever makes you happy. And at the same time, just have that drive and understand that you're not working for an hourly wage. You're not looking for a vacation time. You're not looking for sick pay or vacation pay. That's a loser mentality. You have to put in the time, effort, and energy, and you have to continue to learn. And you should always talk to people who are elder than you that's been through something. And at the same time, though, you should only listen to people who have more money than you. Because if you're 70 years old and you're dead broke, unfortunately, I can't really listen to what you have to say, right? So, but the point is, I want to respect everybody, what they have to say, because there's tidbits that might help you, me, or anyone who's listening in their lives, right? Because a lot of people have had bad downfalls and you want to know how they get there, so you don't do it, right? But at the same time, I think that you should follow your dream, but at the same time have something to fall back on. And I believe that real estate is the success to your future because it's an asset class that's a necessity, it's a luxury, and it's mandated by law coming soon that people need a place to stay. And that being said, you can look with your field glasses and understand that that's where the money's at.
Damn, man. And that's real talk right there, man. And I can't thank you enough for joining us, Brian. I mean, we got Brian Aponte, man, real estate mogul in Tampa Bay and, across the nation potentially. You never know.
Yeah, you know what? I like to stick in my backyard. I like home cooking. But anyway, I appreciate you guys even, giving me the access to talk today. Thank you very much.
Absolutely. And then audience, if you really like the episode today, man, comment, and subscribe. If you have any questions for Brian, put it in the comment section, and then we'll get back to you.
I appreciate it. Thank you.